Good morning, everyone, and welcome to another segment of our financial literacy month. Well, Life Insurance Awareness Month, but like I had said, we were going to make it a financial literacy month by dropping tips here and there, sprinkling them through the month, just so that we can educate ourselves on some concepts. So today we're talking about tax advantages. On Monday, when we opened this up, I had talked about the different phases of wealth creation. And those phases were accumulation, protection, and distribution. So the distribution phase is when people, they've accumulated their funds and now they want to at least start accessing that money to use it for whatever reason. If it's retirement, most people it's for retirement. But the one thing that we don't realize is that retirement can be interrupted a lot. And it happens a lot of times. It can be interrupted not because the person didn't think ahead. They did the right thing by actually setting up some kind of retirement plan for themselves. But the question is, was it in the right bucket? Because most of the times it can be interrupted by the future taxes, which you don't know what those are going to be, and they can also be interrupted by the market. So the conversation today, and we're keeping it short again, is how can we avoid paying more taxes than we need to, because the 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 truth and the reality is that at some point in time we will pay taxes, whether it's through sales tax, through our income tax. We will pay taxes at some point. And disclaimer here, I'm not a tax attorney, I'm not a CPA. I'm just providing education here. With any information that you receive from here, go back to to your tax specialist, and obviously with the tax side of things. But on the financial side, I can definitely help you. So with the taxes, we don't know, because the national debt that the United States has to be paid by something. It either has to be paid by levying every household. What if they go per household? They divide the number of households into the national debt. That will give you how much each household will owe. But it's easier to do it through taxes. So one thing that actually is very erosive to retirement is taxes, because most people who set up a plan, they cannot anticipate how what the tax rate is going to be when they retire. So we've had people who a month, 2 months, 6 months, a year before retirement, they're having to dust off their resume and start looking for work again, or they actually went on retirement and have to dust off that resume to come back to the workforce. And the reason is because whatever plan they put in place, it did not cut it. It wasn't able to to sustain them do their lifestyle. It wasn't able to sustain all those hobbies that they had set aside for themselves, or they thought that they were going to be able to afford, and they have to go back to work. So when we see people going back to work, it's not because they want to, it's because somehow the retirement plan that they had was not airtight. So in essence, what we're saying is that as we're building wealth, as we're creating different avenues to wealth building, we need to be very strategic. We need to be very intentional. We need to make sure that we're talking to the right professionals, because if you're just sitting down with your Uncle Bob, who has never put a retirement plan in place, and they're just telling you what they heard from their friends at the bar, or they're just passing down what their whoever they look up to pass down to them, and they're just telling you that that's not the right way to sit down and make a plan, because we have to make a strategic plan, airtight plan, that has a good roadmap. Because again, I keep using this analogy of the GPS. If you don't have a GPS taking you somewhere, you're just going to end up just going you know, going in any direction without a clear path and without a goal in mind. And at the end of the day, you find yourself just grabbing for straws and having to recreate the plan. But if we put a plan that's solid and make sure that you're taking advantage of those tax advantages out there, then you can sleep well at night, you can be rest assured, and you know that your financial plan is good. So in essence, there are tax codes that can help you take advantage of those. One of those tax codes is the 7702A code. That code is also the insurance-based retirement plan. So that's a code that a lot of people take advantage of. They're able to reallocate their funds to make sure that they're able to plan that retirement and ensure that they're not being, their funds are not being sunk by taxes or the volatility of the market. So I'm going to keep it there, keep it short. For anyone who wants to find out more, again, let's sit down, let's have a conversation, let's look at your specific plan and do a personal financial review. It's free. We'll sit down, draw that plan, and see what works for you. Because again, it's not one size fits all. It is, we have to customize plans based on people's needs, people's goals, where they are on the financial journey, and just make sure that we're taking advantage of those taxes, so that not just a certain group of people should have the tax advantages. We all have access to those same tax codes, because it has no color, it has no height, it has no size. It's just whoever is financially literate. And that's why we're going out and educating people on these concepts, because financial literacy is not taught in schools. So we want to make sure that we're letting people, this is meeting you at your comfort. You can watch this video whenever, you can share it, forward it to other people, and just, share the knowledge. All right. So until next time, I will chat with you again. We'll have another segment, I believe, on Tuesday, and we'll be talking about teaching them while they're young. So legacy, a lot of legacy. I believe in legacy. So that's what we'll be talking about on Tuesday. Stay tuned for my posts, videos, and a lot of nuggets coming your way. Stay blessed.